Welcome to the first panel. My name is Joost Mulder. I'm the head of public affairs at Finance Watch. And Christoph said one thing that struck me, which is that people, ordinary citizens, don't trust banks, but they also often don't trust politicians. So let's see if we can improve that in this panel. So the first panel, and we're waiting for the last MEP to join us, is about restoring confidence in the financial sector. As we all know, citizens and consumer trust is an essential part of reviving economic growth. We want consumers to start spending, to get the economy going again, but also trust the money that they don't need immediately to financial institutions or to other intermediaries that can put that money to productive use for society. Part of that lending might be done in the future by new intermediaries, such as crowdfunding websites, lending clubs. It could be through improved direct share ownership, or it could be through more traditional channels, such as savings accounts. So the European Commission recently presented its flagship Capital Markets Union project. And in this project, the Commission recognizes that citizens' savings need to be put to productive use for the real economy. And in doing so, the Commission will present a green paper on retail and insurance financial services planned for the last weeks of this year, looking at barriers to cross-border provisioning and purchasing of financial services. So we want consumers back on financial markets, and on a cross-border basis if possible. But how can we expect citizens to trust the financial sector after all the scandals that have taken place and that Christoph has alluded to, after all the regulation that has been implemented, and against ever-growing complexity? How can we help citizens make the right choices for themselves and for society? The way I would want to structure this panel is by giving the MEPs a good 5 minutes for an opening introduction. So I will shortly introduce all three of them. Again, Cora van Nieuwenhuizen should join us shortly. You were coming out of the same meeting, so I don't know where it's gone astray. Okay. Then we have a short Q&A round focusing on at least two aspects. The first one would be the role of citizens as retail consumers in financing the real economy, but then turning it around and looking at what citizens actually need when they act as consumers to better trust financial markets. So let me introduce the panelists. Sirpa Pietikäinen, to your right, to my left, has been an MEP since 2008 for the Finnish EPP delegation Kansallinen Kokoomus. She was a member of the Finnish Parliament for 20 years and an environment minister for 4 years in the 1990s. Besides her financial work, she was responsible for the European Parliament's Environment Committee report on the circular economy, which demonstrates her belief that finance can be a force for good in the real economy, be it for the environment or be it for citizens. Anneliese Dodds, to your right, joined the European Parliament in 2014 for UK Labour. She has a background in academics, including her final post as a lecturer on public policy at Ashton University and at King's College in London. Some of her academic work has been on social inclusion, a topic that certainly links to the increased need to have citizens care for themselves in financial markets. She also has a strong interest in behavioral economics, which might come up later in this debate. I will also briefly mention Cora van Nieuwenhuizen, who should be joining us. She also joined the European Parliament in 2014 for the Dutch VVD Liberals. She actually has first-hand experience in the financial industry, having started her professional career at the Dutch branch of Crédit Lyonnais. And after more than a decade in local politics, she spent 4 years in the Dutch National Parliament, including 2 years as a president of the Finance Committee before being elected MEP. With that, without further ado, I would like to give the floor to the panelists. So, Sirpa, the floor is yours.
Thank you, and try to help me to identify a bit of the time, so I wouldn't run too much over the 5 minutes. And well, you referred to the trust of the people to the politicians, and I guess if we could restore the trust of the people to banks and financial institutions, so maybe we could restore a bit of our trust as well. And that all starts with the regulation, and this is my first point. For some reason in my experience in politics, if there's one industry that is far more vocal than others about self-regulation and anti-regulation, it is financial market. And so it has a long tradition on saying, okay, Don't fix it what is not broken. Don't intervene because you just mess up the good working system. Don't try to regulate because then you get unintended consequences and problems more than benefits. And don't kill the financial innovations. So basically, we guys know how to run the business. We know it well also after the experience of the last years. And my first point would be that if you ever haven't read in your life game theories, please do it. The point is, if you get wrong incentives, it is not that you would have ethically bad guys in the financial markets more than in other parts. If you have a wrong incentives, you get wrong results. With wrong incentive and negotiation settings, totally fine and good people make extremely hazardous and horrible choices and solutions. And why would we think that this is not worthwhile area of regulating because this is the bloodstream of our economy? Why don't you think and say, okay, why do you regulate whether you drive on right or left side on the street? Let people decide. It probably is just some rotten apples that ride on the wrong direction. Why don't you say that using child labor or the property rights should be self-regulated? Well, you guys probably figure it out who owns and what, and if I decide this is mine, I'll go and take it. The regulatory framework creates markets, it creates long-termism, it creates partly incentives and disincentives, and it creates the predictability. And this is something that I think that we should bear in mind. What then in the regulation, on my mind, we would need and what are on the crux is the debate about stranded assets. That means the resource efficiency, climate impact, the combination of environment and finance that we haven't yet solved. How you put that on reporting, how you put that in credit ratings, and accounting, on PRIPS, on information and all that. Then I think that in the longer run, at some point, we would need a investor rights regulation, general regulation in Europe, plus a redress mechanism. Otherwise, I won't invest in Portuguese. So sorry if anyone of you is from Portugal. I don't have anything against Portuguese. It just happens to be the most furthest point from Finland where I come from. And I don't speak Portuguese and I don't understand Portuguese economics that much, even though I'm very good in terms with Elisa Ferreira. And how would I invest on Portugal? This is the big question. And how would I invest in real economy? It's about knowing my rights, knowing having a good effective redress mechanism, having a pop-up when I go wherever in page telling that, okay, like with the passenger rights, this is your rights, this is how you find the information, this is how you redress, please visit if necessary. And by the way, that would have a consequence on financial sector and those that deliver the products and goods. Secondly, we would need to have more and clearer information and level information. That is what we are on the way of working already with packaged retail investment products, but in a prospectus, all over the products. We would need this kind of a principle of regulation that it applies all the categories and products if they are similar. So if it smells like a bank, if it walks like a bank, and if it sounds like a bank, it's a bank, and it should be under bank regulation. That comes to shadow banking, crowdfunding, peer-to-peer mechanisms. Otherwise, you create problem, and you let it kick you before you regulate it, and you have a different kind of a proportionality and regulation to similar product types. Then you would need to have this kind of an escalator mechanism for investments. So that starting what the easiest the startups and smallest SMEs, there should be a proportional but similar regulation than for the listed companies. And the Commission is wondering, would we need to have this kind of a one-stop shop for all the goods? Yes, but in theory we have it. It's called exchange. So we would need to have a proper European exchange that sort of in different platforms have all different product categories in there. So you start from the small, and with the regulatory proportionality, it goes to up to big ones. You need a new form of information, European. You would need to create that kind of a platform somewhere under the auspices of the Commission. But we have it already in Solvits, we have it the passenger rights, we have it in internal markets area, where you can find the advice and the information in your own language, and where you can consult someone if necessary. Then I'm not going to touch the digital peer-to-peer markets, but this is a big question, how you deal with that one that is emerging all over. Last but not least, it is then how you empower the retail investors. Me and my mother are both retail investors, but our capacities of knowledge and investing and our time span are totally different. So instead, someone telling us, educating us what to do and selecting the products, what would empower us both to be effective? And I was really impressed about years ago, now you probably could do it in the digital platforms, when I was in Japan, about these sort of housewives that are sort of in charge of the pension investments in the households, sort of a Tupperware dinners what they have, where they then sort of collected about 20 to 40 housewives who debated what would be good investments. And because they were quite a power of investment, they once in a while invited some of the company representatives or banks to come on their meetings and tell about their products or their company. And sure, if you have a couple of millions of money going there, you will come. So how you could sort of empower retail investor organizations, Bergs, finance watches, create new ones, to enable investors themselves to gather via platforms or physically, or really to have the knowledge they want and to decide what kind of a risk they are willing to bear. But that doesn't exclude the point that excessive risks and complexity, this kind of opaqueness of products, should be cleared out in regulatory part. Thank you.
We'll try to get to financial education later on. I'd like to pass on the floor to Anneliese. Apparently, Ms. van Nieuwenhuizen can't join us today, unfortunately, so we'll just continue with the three of us.
Great. Well, thank you very much indeed for the invitation. It's wonderful to be here, and I think it will be a challenge to follow up on all the very stimulating ideas that we've just had from Sirpa, but I will do my best anyway. I thought, first of all, with your permission, I would focus on what I see as some of the assumptions, perhaps, that are underlying the European approach to capital markets union, but also particularly to retail financial instruments, and where I think some of those are problematic, before moving on to what some of the additional policy prescriptions might be while we look at this landscape. As was mentioned, we're discussing these issues in a context where we're looking forward to a green paper on retail financial services and insurance, and where we're starting to see some of the elements of capital markets union in terms of concrete proposals being released. And certainly it feels like both of those legislative drives view savers as potentially an untapped resource of capital to be used by the real economy in different ways. But as mentioned, I feel there are some assumptions underlying this policy drive. And the first assumption and I'm sure we could have a big debate about this, is that Europe is necessarily much further behind the United States when it comes to our approach to investment in the real economy, and that we need to shift towards a more American model. First of all, I think Finance Watch has actually done quite a good job at looking into many of the summaries of data that are often used to suggest that there is far less use of capital markets in the first place in Europe. And I think actually the jury is out potentially on that question, but now there's a very strong narrative that we are behind the United States, which is difficult to challenge. But secondly, I think one of the reasons why many consumers actually get involved in capital markets, potentially in the United States, is because they don't have the developed systems of social security, clearly, that we have within the EU. So they feel potentially, well, not forced because they've not had experience of other systems, but that is the culture that exists on that continent. Now, is that necessarily something that we would want to emulate where collective solutions are not available? But also, I think there's a question about the extent to which US-style reliance on capital markets necessarily promotes sufficient allocation of resources. Quite often in debates around capital markets union, I've had it quoted to me, for example, that it's a very, very good thing that you have much more friends and family lending within the US context. And you know, I would say that's fantastic for social cohesion. However, it's not necessarily fantastic for the efficient allocation of financial resources, because in that context, people may not be taking the right decisions about where to allocate their available capital. So I think perhaps we need to look into that assumption that somehow Europe is far behind the US with quite a critical eye. Secondly, I think there's also potentially an assumption that we're shifting into looking at capital markets and retail financial products for consumers because the banking system is sorted out now at European level. So all the work on banking has been done. We can move on to look at this new area. Again, I think that's very problematic. I think it's problematic when it comes to looking at the financing of business, where actually you still have very, very variable patterns of lending, particularly to SMEs in different member states and within member states. But I think it's also very problematic when you consider access to basic banking services, particularly for disadvantaged groups, where anecdotal evidence seems to suggest that access is very, very patchy, but we don't have any robust evidence base on that issue at European level. We only have it to an extent within some member states, and even there, it's not applicable across all member states. So I would like to see a push for more transparency around the availability of banking services, as well as around some of the issues about cross-border availability of retail financial products, which in reality probably will only ever be used by a relatively small group of consumers. As I said, I wanted to comment very briefly on some of the measures that are being promoted, as well as some of the assumptions perhaps that underlie them. Lord Hill, who of course is the commissioner responsible for much of this agenda, said there's 3 principles that we need to focus on: transparency, choice, and competition. And of course, it's very difficult to disagree with those principles, and much of what he said around promoting them I would thoroughly agree with. Of course, doing that in practice when you sometimes have quite strong interest pushing in one direction or another may be potentially much harder. But I think we also need to not forget about the fact that in order for these principles to work coherently and effectively, there does need to be that basis of trust in the financial system, as was mentioned before. And again, to be fair to Lord Hill, he has acknowledged this, but I think some of what he said hasn't always pushed in that direction. So, for example, just one quote from him, he stated, "Risk mitigation and security are an essential element of any financial services policy, but they should accompany and not stand in the way of innovation and new product development. Well, I would like someone to stand in the way of developing a new product if it's likely to cause me to lose all of my savings when I haven't been informed of the potential for doing that, when I have myself quite low levels of financial literacy and numeracy compared to what I should do, just as many other consumers do. So we shouldn't throw out the product design baby, I think, with the bathwater here and pretend that everyone is perfectly informed as a consumer of financial services. And just to start rounding off, I think it's quite interesting to look at the debates in the UK at the moment, where quite a lot of extra control potentially for consumers has been given to individuals who can now cash in their annuities early from their pension. There's been many attempts to improve financial education for people who are about to be potentially taking on their annuity and able to spend it. But quite a lot of the evidence suggests that that education is being taken up by a minuscule number of people who are likely to make use of financial products. In fact, I was recently on the train, and I was trying not to listen into what a fellow traveller was saying, but he was clearly lining up to use one of these products, cashing in his annuity, and he said, "Oh, I have to say it all sounds rather too good to be true." And I thought, well, that's probably because it is rather too good to be true, mate, and you've obviously not talked to anybody else about this. But just finally to round off, I think, and perhaps this is a predictable comment from a socialist member of the European Parliament, but I hope that as we discuss these issues as well, we don't forget the fact that for huge numbers of consumers across the EU, even the possibility of saving is not even there. I mean, within the United Kingdom, for example, a third of people don't have sufficient savings for basic repairs like fixing a cooker or a fridge. And so we need to make sure this is an agenda that focuses on building up people's ability to save in the first place and doesn't take our eye off those mechanisms that will help people who can't save. Thank you.
Brought up a lot of topics that I wanted to discuss in this panel. Before I move to the audience, Sirpa, if I kick off the debate looking at the question of what is the role of citizens in financing the real economy, and you mentioned this idea of the funding escalator of direct share ownership. I noticed that you've been promoting this idea also in legislative text and in non-legislative reports actually in the Parliament. How do you see this evolving in the future? Do you think in 20 years from now we in Europe will be holding shares in European companies to the tune of Americans holding American shares as a pensions investment, for instance? Do you think that trust is there? Do people have the right information about what companies do, about what the risks are of those investments? And if not, what sort of measures would be needed to move in that direction?
Well, firstly, I don't think that we totally go in line with the Japanese or Americans, because as Anneliese already said, our pension and social security systems are different, and that's good. So we need always to have the priority of public pensions, then collectively, legislatively guaranteed pensions, then these IRPs, and then extra savings. But then again, our saving pension funds are retail investors also. So we certainly have a bigger bulk and share of the money hopefully going to real economy. But the problem nowadays is that actually it goes to short-termism. And you can't cut it only by doing something for the retail investor. That is a lot of legislation that goes to long-term investment package and on environmental risks and all that we do not take into account.
So you're saying it could actually be a bad thing that we are legislating for packaged products only?
Yeah, exactly,
because
and that is my point.
Yeah. Consumer protection.
Because now we make it look clear and simple. And this is our sort of aim and purpose, to make the products clear and simple and look them easily readable. But that then again might give the wrong incentive and understanding. Okay, these are clear and simple products. But what if I go and buy a stock or a share? No idea what's going to happen with that. And that's why I would find it so important that we would have a level playing field there with the prospectus and others, that you would have the same kind of information of all kind of whatever investment product, and this is again the same if it walks like and if it smells like and all that in all of the regulation. And then the second point on this information part, the information is one, and the second part, and I'm especially worried, I think that we should invest more in stocks and shares and startups. Yes, there are risks. And yes, there might be smaller risks on funds and packaged retail investments. But so is the reward for the investor too. And we know, according to all the studies, that you don't actually get that much of an extra with the professionals, and I don't deny that they are professionals for your investment. And so I'm quite worried about the fact that we are investing in personal retail investor capacity more and more short-termism and on packaged good and funds, not on the real economy, on stocks, on startups, where you can understand the risk, and then the risk is not always bad. You know that you need renewable energy and you might invest, but you can't bet that this company and this innovation is going to be the best in the world. But it's good probability, and you understand what kind of a risk you are taking and what kind of a time perspective to you should wait to get the rewards on your investment.
So if we continue on that sort of idea of short-term, long-term, Anneliese, you mentioned product design rules, product rules in general, product regulation. Isn't part of the analysis of restoring consumer trust that there's a difference between short-term trust or short-term wins and a long-term returning trust of citizens that the financial sector is able to provide them and the economy with what they need? As the Dutch saying goes, confidence comes by foot and goes by horse. Isn't this part of the analysis, if you want? Yeah. And how can the rules that you've suggested play part of restoring that long-term confidence? Because that's in the end what we're after.
Yeah, absolutely. I agree. I mean, I suppose to an extent, people need to have short-term trust that when they're being offered a product, that they know that the person who is discussing it with them, if they say they're independent, that they're really independent, that there's clarity around fees and charges, for example, which is where, you know, I would definitely be in line with Lord Hill's agenda in those regards. But I think you are right around the general concerns that people have around their ability to rely on an income in the future. I was at an event this morning where the very worrying statistic was put forward that people who are, and I hope I'm getting this right, people who are 35 people who are 45 in 2035, they will be looking forward to having half of the income coming in when they're retired than people who have now. So that's quite an astonishing kind of reversal in fortunes for older people. But whether everyone's fully aware of that and able to take the decisions that they need to plan, I think is quite a different question. So we do need to try and focus on building up that long-term trust. And I think some of the answer to that is going to be regulatory. I think inevitably that's been affected by the number of different scandals that have occurred as well, because that affects people's general level of trust. And I think it does lead in some context to people turning away from financial products, for example, and turning to other forms of investment that appear to be less risky. I mean, the UK, again, is a great case of this, where there's a huge amount of people's wealth invested in property. I mean, that is viewed as by far the safest way to invest and provide for your retirement for most people. And in most cases, they're right. But of course, that has a massive impact on people's ability to have a roof over their heads, and all those who aren't able to have the resources to invest in that kind of asset. So I'm not sure if that answered your question, but I think it's a concern.
I'm just looking around in the audience if anybody is already willing to answer a question. I'm just not seeing the colleague responsible for running around with the mic, but maybe Adrian can jump in there,
I think he's at
or one of the colleagues sitting up there. Can you handle this? So, hands, please. Who wants to ask a question? Can you come to the front a bit further, Adrian? I think there's a gentleman here with the blue jacket. I have Eric, I have Guillaume, Isabel. So we'll start with you.
Yeah, thanks a lot. Some very interesting angles. I'm Michael Budolfs, and I'm the president of Europa Finance, and I represent 1.5 million workers in the finance sector. Of course, this is of big interest to us. I'm a bit cautious about only having angles, debating this angle about people who can afford to invest, because in fact we are excluding a lot of customers who in fact need advice about how they structure their economy and being pushed off, so they loan to high interest rates and so on, young people, underprivileged people. So just I think we should have that on board also. But I would refer to a study showing that people having regular advice in the finance sector over a period of 7 years, in fact, doubled or tripled their economy. So this is a very important study showing, in fact, the value of financial advice. And I would ask you, how can we ensure that you actually, as a citizen in Europe, has the right to meet a trained person for having financial advice? I talked to a manager from Nordea the other day, could be any bank, and he said, it has never been easier to access a bank. And I said, well, you're right, but it has never been more difficult to meet a person.
Okay.
Because it's digitalization taking over and leaving the customers far away from this advice that they're given.
Okay, Eric over there, perhaps. Let's take 1 or 2 more questions or comments, and then move back to the panel.
Yes, thank you. On the regulatory aspect of confidence, I wonder if the subject of the guarantee on deposits is taken with its right importance. The banking sector has kind of established that the guarantee given on deposits is a service to customers, and that governments owe it to customers. In fact, it's a huge subsidy for banks.
It's a guarantee for banks, protection for banks.
It's a huge protection. They don't pay the market price for it. They're very keen on everything being market conform, but not that. And they're not prepared, as Sirpa Pietikäinen has reminded, they're not prepared to give anything in return for that huge advance. So should this guarantee remain at this level and be given by governments? In the US, it's the FDIC, which puts rather strict conditions on the guarantee it gives.
Okay.
And a second question I had on the regulatory aspect of ethics. Why are we not putting more demands on board of directors as far as that is concerned?
Okay.
Why are they not more accountable? After all, they are responsible for running the business. Why are they never put in difficulty when people within their banks behave badly?
Can we take 1 more question and then do a second round? That was Erik de Keuleneer, who was here in his capacity as Finance Watch independent board member. Isabella, I'll take you later then. Please introduce yourself. Yeah.
Guillaume Prache, Managing Director of Better Finance, the European Federation of Investors, about 30 associations, national associations, and 5 million people, including in Finland and in the UK. Thanks very much for this very interesting input from MEPs on a key point, which is to try to restore trust in the financial sector. I was specifically interested by the point of Sirpa on having a level playing field in terms of product information among all kinds of products. And it is true that the PRIPS regulation stopped short of including shares and bonds, but also pension products. Fortunately, the new Commission proposals on the Prospectus Directive will offer a second chance to get a key information document on shares and bonds. But most unfortunately, I am told in December, you members of the Parliament will vote on the IORP2 for occupational pensions. And the rapporteur and the Council have erased all the provisions on creating a sort of KID for occupational pensions called PBS, Plan Benefit Statement, Participant Benefit Statement. And still, there is nothing for personal pensions. There is no KID for personal pensions. So my question to the distinguished MEPs is, what is your position on this, having a key information document, simple, plain English or plain language, short, understandable for occupational pensions, but also then for personal pensions, which are very key issues for EU citizens.
Thank you, Guillaume. I think Guillaume was hoping that we would have a third representative on the panel today to ask this particular question. So let me repeat. Mandatory or a right and entitlement to financial advice, deposit guarantees, independent board members, and what can the review of the Prospectus Directive to remedy the issues that have been brought up. Sirpa, can I ask you to go first if you feel most questions are appropriate?
To start with education and advice, I'm a bit confused about this issue in general, and that comes to the point how to organize it effectively. And we all know that if you have separate entities giving advice, we have had the debate about the compensation issue there. So actually, are you really giving non-partial advice, or are you selling the products that actually you are getting better compensated? I'm not against compensation, because the more it costs, the less the people who would need it most can get it. But then again, and this is the case in Finland, for example, if you don't have these independent advisors, actually it doesn't get any better if you go to your bank and your bank gives you the advice. You think that this is the sort of a neutral, non-partial advice what you are getting, and people usually do not feel that they are in a selling situation. Like, of course, if I go and buy a car, no one is in Volkswagen telling me that please go and buy a Tesla, it's a better car. And it's quite sort of fair that they are not sort of obliged to do so. But okay, who then would give the advice? Okay, you could put it in the curriculum on education and schools. Fine, takes a long time. People don't remember then when they would need it. You don't have a European sort of arm to put it compulsory, and the product change so quickly. So how to do it so that it actually would be effective? More independent advisors, yes. More banks and everything, but they are biased and partial always, and we have to bear that in mind. And then again, that's why I sort of love this sort of what about empowering the NGOs and the buyers and they whatever association or platforms that I was trying to introduce, because that might be one avenue that they go and ask the advice. Then bank account guarantee. I'm not a great fan of that. It's going to come and it's going to go even higher. It's biased situation then again, but the reason for that is, of course, the economic security, not sort of thinking from the financial perspective, the issue. Then the liability on board of directors. Yes, I'm fully on board on that. The issue nowadays is that maybe you don't even try to make the case hard enough, but then again, if you don't have the legislative background, you can't hold the boards liable. Let's put it one of these pyramid fraud cases or fraud cases with others. In theory, you are reliable of making the internal inspections and regulatory checkbooks okay, and then always the CEOs and boards can say, well, I didn't know, and probably they do not know. So they would need to be held liable of knowing. We should create something there.
That is something that would be done at national law level, given that it relates to criminal law, isn't it? So.
No, actually, we could have done it on shareholders' rights directive, but they actually weren't that much of a window to move on that direction. Then, well, you guessed my answer about IRP and the insurance. Yes, all level playing field, it should have been there. Now we are creating again this kind of a very opaque system with different rules and regulations, and it's crazy if the insurance systems are not included.
You on independent advice as well, especially given the UK experience so far with the ban on inducements?
Yes, indeed, which we've been discussing at length very recently. Thank you. I think that they were all really stimulating, quite difficult to answer questions, really. In relation to the point about, and I think you put it very well, surely people should have the right to meet a trained person for financial advice. I think that's a very, very interesting idea, because the ability to seek out those kinds of people and to use them perhaps is reducing because of factors like, as you said, digitalization, the fact the number of bank branches is reducing, particularly marked, it appears to be, at least in my country, in disadvantaged areas, where potentially the kind of cross-selling of products that might occur in better off areas isn't available to banks. On this issue about, well, could NGOs kind of fill the gap? I actually used to chair a debt and welfare advice centre before I became a member of the European Parliament. It was a voluntary role, and I have to say that, again, the problem with that approach is that many of these organisations, I mean, they differ across European countries, so the kind of advice architecture is very, very variable across different European countries, but in addition, many of them have been subject to quite swinging reductions in funding over time, so their ability to kind of fill in the gaps is reduced. And there, I think, a lot of people will turn to try and use independent financial advisors. I mean, I use one myself, but the question is, will everybody be able to do that? Will people know that's available to them? Will it necessarily be an attractive business case for an independent financial advisor when they're looking at someone who has very small amount of funds potentially to invest? So maybe we do need to think about this being a case where there will have to be some kind of attempt to draw these different elements together, if that right could ever be operational, because I think perhaps we should think about it more. The issue about the guarantee, haven't banks got it, incredibly good? I think that actually, yes, we certainly need, in my opinion, much more transparency around, as I said before, issues like where they are lending and to whom. We don't have that. I think we need that. That would at least enable us to assess what they're doing much better. When it comes to boards of directors, I think now there is potentially pressure growing, as far as I understand it, certainly in some areas around remuneration, and having much more scrutiny by boards over remuneration issues and delinking potentially inappropriate risk taking from remuneration. So perhaps we're getting some good change in that area, maybe, but obviously we may need to look at mechanisms for trying to get some more. And then finally around IORPS, I mean, this is an issue that I've been involved with to an extent, not formally, but just in putting forward amendments to the package as discussed in the European Parliament. I agree with you. I personally, I wasn't so happy about removing all the requirements that were there to have more standardized information, to have more consumer protection. Whether necessarily saying you had to get to just one page and being that prescriptive was necessarily the right way to go, I'm not sure. But certainly there did need to be more clarity there. So perhaps the baby's been slightly thrown out with the bathwater in that case. But I think there were other elements of the initial package that I felt were quite problematic. I mean, for example, initially it was going to be suggested every trustee for an occupational pension scheme had to have some kind of financial qualification, that would automatically rule out the very kinds of people who often raised problems with occupational schemes, who might be trade unionists or employee reps or other individuals. So I think there was a need for a bit of change in the package, but perhaps in some areas it's gone too far. I can understand why you would feel like that.
Thanks, Anneliese. Perhaps that's a good reference to the housewife club that you mentioned earlier, who should be not thrown away with the bathwater. I'm afraid we're going to have to round off. Apologies for the people who wanted to ask a question. As Christoph said, there is a remembrance ceremony in the Parliament starting in a small 10 minutes. So if I would summarize the debate that we've had, there's a lot of work to be done before we can completely expect citizens to play their role on financial markets as well-equipped consumers. I think a lot of ideas have come up that can be improved going forward, can perhaps be added to the agenda that is currently consisting of the Capital Markets Union on one side and the Retail Green Paper, which is taking a rather narrow view looking at cross-border barriers. I share some optimism that there are perhaps some areas in between that we should address and avoid that they fall in between. Right. On that note, thank you very much, Sirpa Pietikäinen and Anneliese Dodds.